Hey everyone, this is Kirk here again at optionalpha.com, and I want to go over with you guys the ultimate guide here to understanding option sellers. What is option selling? And this is going to be a basic tutorial for all of you out there who are just getting started with options trading and don't understand the difference between an option buyer and an option seller. So we're going to get right into it here. But first, let's recap option buyers. So we know that buyers of options have rights or choices, right? That's why they call it an option, basically. There are two types of options, calls and puts. With a call, this gives the owner the right, but not the obligation, to buy a stock at a specific price by a certain time. With a put, this gives the owner the right, again, but not the obligation, to sell a stock at a specific price by a certain time. So again, you guys understand all these basics. This is very options trading 101, but let's get a little bit deeper here and go into option sellers. So option selling obligations. If you buy an option and you get a right, then someone else must have sold that option to you, and that right has transferred the risk. So since buyers have rights, sellers must have obligations. That's how it works. There's two sides to every coin. The option seller has to legally fulfill the contract if the buyer decides to exercise their option. Selling options is also widely called option writing. And that's what you typically see on most websites, either option selling or option writing. So a quick visual look, this will help you understand. You have the buyer and the seller on the left side in calls and puts. Again, remember that buyers have the right to buy the stock. A seller has the obligation to sell the stock to the buyer. Same thing on the put side. The buyer has the right to sell the stock, and the seller has the obligation to buy the stock on that particular side. So again, pause this video, print this slide out. This will be a really great help and visual aid as you keep going forward. Option buyers do have a valuable right and choice, but they have to pay to have that right. There's no free lunch, as I was taught. So while sellers incur obligations, meaning that they have to buy or sell the underlying security, they do get paid for their responsibility and the risk that they're taking on. You see, most traders feel that buying or selling is the only way to trade. So hopefully you can see that there are pros and cons to each strategy, and I want you to understand that there is no free lunch. There's no right way to go. There's no wrong way to go. Option buying is not any better than option selling. You can ask a lot of people out there, and my personal opinion is that each strategy depends on the particular market that you're in and where volatility is at that time. But at least now you understand a little bit more about what option selling is and who option sellers are. So again, thanks for watching this video. I really appreciate it. Please let me know if you have any comments or questions right below. And don't forget to share this video on your favorite social network.